Good morning, audio update for the stock market, a morning brief. It is May 19th and it is 8:36 a.m. Eastern Time. I'm Rich Potts from A Critical Point. Okay, in terms of the stock market, I'm not that pleased with the sharply lower overnight prices. It makes me concerned. This market's got some problems, and as I've warned you for months now, that was such a fantastic bull market last year into this year. You know, we do have to consider there could be a year where the market goes nowhere. So I can see this market doing nothing until we get to about the fourth quarter, and then we're going to have a nice bull leg within a bull market, and we finish the year all happy-dappy. But, the point is it could be a struggle and frustrating from now into that fourth quarter. Personally, I think the worst case scenario is that it's going to be a struggle now through July, and then we get going on that final up move for the year. Now, and I still favor, and the model still favors, that instead of doing nothing all the way into July, that the market should rally now into late June to early July, drop in July, and then start the next leg higher in the bull market. So I still prefer that. But as I see some of these swings, these stalling out, as I see some of these shorter term trends within that the model's tracking turning sloppy on us, choppy, it does concern me. Can this last for quite a while? So just warning you, this can be a problematic market for a while. Not really all that bearish, but it just can't get traction for being bullish. Part of the reason is we're just not getting fresh bullish news. I mean, even when we get it, it's news that the market had already bet on, had already dialed in, and then it says, well, what's next? Okay, where are we going? This morning even, I think it was Target sales or something like that were fantastic, okay? And yet the markets are off this morning, okay? So we definitely have dialed in a lot of bullish forecasting, and the market's just trying to really rest, consolidate, and wait for the economy to catch up to it. Then it's probably going to start the next leg higher. So we do have to watch out for those kind of complications. Okay, so where are we at least today and maybe into next week with the stock market? The bottom line is yesterday the market put in a level 4 interweek bottom, only rallied a bit and turned down ahead of time. So it was a warning of still this slipperiness, this choppiness type market. And what the model's now saying is a possibility, a top that did not work, but it still identifies it as occurring on the way down in the overnight market. And that price is 4,113.25, okay, 1,113 and a quarter, for the June E-mini S&P 500. If we see that trade above that, and especially if it trades above that at 1 p.m. or later today on into tomorrow, there's a good possibility the level 4 interweek swing has turned up. And the reason I say that is the model is saying this market should not bottom to 1 p.m. Eastern Time today or later for this level 4 swing. But we also have a price level to tell us something's changing and it's perhaps bottom. So we need to watch those two factors going on here. So the bottom line is they can still sell this morning, even though when the market opens up, it's already going to have a gap lower in the cash market, likely. And some might think that's bullish. They need to put it up and fill that gap. The point is they can actually still sell this morning. They could follow through. They could be getting concerned, the overnight traders, were that bearish. They knew something is coming, and it just scares people to sell as well during the day session. So we can definitely see some softness here this morning, but ideally late tomorrow into the next day, we ought to see the stock market bounce a bit. Now, this market is quite oversold on an intraday basis. So I'm hopeful what's going on is we've seen a large round of selling last week. They panic sold, and what's happened is this is like an aftershock with an earthquake. This is another wave of selling, but the selling is waning. It's declining. There's not as much, and they're not going to be as aggressive with it. I think technically they're trying to test last week's low, and if they don't find enough sellers to push it to a new low, they may think, you know what, this is actually a bargain. We've found some kind of floor here. That's what I'm hopeful they're going to do. Now, as we zoom out for these level 4 swings, and again, I've given you some parameters of what time of day and later to expect signs of a bottom. I've given you a price level that if it trades above it, signs of a bottom. But again, that could only be for these intra-week swings. It may be meaningless for these larger trends. So what's the larger trend doing? Well, there's one scenario saying the market is sloppy enough to assume that it can actually bottom now for a level 3 monthly or intra-month kind of trend. Okay, and this would suggest the market would be up next week. The problem is there's still lower probability that that can delay into early next week. So anywhere from today, later today that is, because it needs to coincide with that level 4. Today on it early next week we can get a level 3 bottom. There's other scenarios that suggest no, that bottom will not occur to next week. Okay, and so it's a bit iffy here. We've got more scenarios than I like to see, and the reason is the model is picking up on the fact that people really don't know what they want to do, and unfortunately sometimes that creates a scenario that when in doubt, sell. Okay, so this can create some of this sloppiness and choppiness here. Even though the economy is still growing, if anything, it's going to get better and better and better. We can just see that you can get these pockets at times where people are just going to sell anyways. Okay, they're just trying to protect their profits, and they're probably going to make a mistake, but they're going to do it anyways, and they're going to make an impression upon the market, and then that causes more people to get scared or panic a little bit. So anyways, with this coming level 3 bottom, it would also be, I think, the latest allowed for the level 2 that we've had a difficult time timing in the last 3 weeks here, and problems with that type of trader as probably the least convicted and the most confused. And I think they're still creating problems right now, okay? Somehow I think this still tucks into a level 1 uptrend from either the March low or more likely the February 1st low. Then we're going to get that rally for June. Okay, but the key is, do we have to wait the next week to get it going? Okay, and then the next problem is maybe we get that rally for June, but it also turns into choppy, sloppy trading range. We're up against many different factors right now. Okay, we're kind of in a muddy field here. Okay, there's some sluggishness here. The market's kind of turned to mush. But as you zoom out and look at things like monthly data and quarterly data, yearly, you look at monthly charts, this market's really just, all it's doing is resting, okay? And it's still in a long-term bull market. So it's just a matter of how long will it take to give us new record highs to show that we're on the right track. So the key is, how do you deal with this? And to me, a long-term investor who's quite often rides out 10% or more down moves, they might as well just write it out, don't bother with it, because it's so easy to sell on a panic day, and it was all over. The selling was over. And then you're chasing after the market, and you've now actually created an opportunity loss that's reducing your overall performance and your long-term profits, okay? But for obviously for the traders trading these bigger swings during the year, you don't really want to see these choppy, sloppy markets, because there's too many chances of things going wrong. You get in and out too many times. You become more short-term trader, and it could just be frustrating. And hopefully this is going to clear up here within, hopefully no later than next week. But anyways, that's my thinking here, is that there's not a lot of downside. Yes, I'm looking for reasons why it would drop to 4,000, and it may. But right at the moment, I want to give them some time today, I think, to see how well they handle bringing this market back to near last week's low, okay? Or near the low on, say, May 13th. So I think I think part of this was the rally late last week was a little too fast for them, and now we're just getting this secondary wave of selling, this little bit of aftershock here. And if the supply can dry up soon enough, then I think they might be a little more optimistic towards the upside. So anyways, watch that upside price level for today. Watch the clock in the sense of 1 p.m. and later for those very fast swings. For those of you who are willing to give it more room before returning to the bullish stance, you want it to trade to a new high for the week. And then I can fully understand why some people have wanted to lighten up and just go with the attitude, this market isn't going to do much of anything, and you don't want to really get bowled up until we go to a new record high. I fully understand that. For me, I hate to miss out of that much, but that probably is the more conservative, perhaps even more mature way of looking at it, that, hey, lighten up, stay out of this noisy stuff, this consolidation, and just buy it back when it goes to record high. But frankly, I'm more in line with saying, I either want to buy the dip or I want to ride it out. past results are not necessarily indicative of future results. Have a great day, and let's see how much selling they got to do this morning here. And I just got my fingers crossed that they'll be back to buying late today. Thank you.